right. Best time of the week. Friday live stream. Happy Friday, Millionheads. Woo! Wild day today. Wasn't a lot of news today, but there was big news today. I borrowed that one from Mish. We were just talking right before we started. A couple of really big stories hit today. Three in particular. We had some intervention by the Bank of Japan last night. We've been talking about that a lot on this channel. The Bank of Japan is just in la-la land with this yield curve control, and they're just absolutely obliterating the value of the yen. It's causing all kinds of problems in Japan. So last night, while we were all sleeping, if you're here in the States, the BOJ started selling U.S. Treasuries to raise dollars, to dump dollars, to buy yen. And it caused a couple of things. When you sell U.S. Treasuries, remember the relationship between bonds and prices and yields, right? You're selling the bonds, you're driving the price of those bonds lower. That drives the yields higher. So we saw the U.S. bond market, the interest rate on the 10-year yield, the debt instrument by which all others are measured, started to skyrocket last night. I saw as high as 4.31 or 4.33 this morning. Really high. And then Japan started this morning dumping those dollars to buy yen to prop up the value of their own currency. So that sent the DXY, the US dollar index, much lower. Well, lower dollars is good for stocks. That sends stock prices higher because stocks are denominated in dollars. And then recovering from this news that the yields were going so high, the Federal Reserve started basically jawboning lower. Jawboning interest rates lower. There was an article in the Wall Street Journal this morning that the Fed, they were going to hike by 75 points and that they were considering they were going to debate what to hike by in December at the following meeting. And a lot of people interpreted that as pivot. Pivot is coming. When pivot? Pivot December. Or at least a move in the dovish direction. Now, I did a video a few hours ago about how I think the market took absolutely the wrong signal. They got the wrong message there. Fed is scared, all right? And what is everybody is so worried about, like, hey, Fed pivot, yay, stocks number go up, money printer go burr. Nobody's saying what is the Fed scared of? And that's what people need to be asking about. Why is the Fed scared? And if you ask me, the Fed is scared of a liquidity crisis, of what all of these bankers have been warning about. The same reason why Janet Yellen is out there offering to buy back U.S. Treasuries, because they are terrified of a banking crisis develop. And then this article came out, or this note came out from Bank of America that says they're worried about forced selling in the U.S. Treasury market. Now, it's just a lot of finance speak, right? Forced selling in Treasury market. Well, think about that. Treasury market, it's like a $24 trillion market. And with the exception of gold and silver, U.S. Treasuries are considered the most riskless asset in the world. So if you're talking forced selling, in other words, margin calls in U.S. Treasuries, holy crap, folks, like pucker up. That is exactly what happened in the UK on September 28th. They had forced selling in the UK gilt market, and the Bank of England had to step in and start printing money, buying up those bonds. And Bank of America was warning that that exact thing could happen in the U.S. Treasury market. So those are some really massive stories, all hit within a few hours this morning. And of course, the market is totally ignoring what could have happened, what could go wrong. They're totally ignoring the fact that the Fed is scared. Nobody's asking, what is the Fed scared of? All they're seeing is pivot. All they're seeing is burr. And so everybody is just piling in and dip buying, FOMO in, market go higher. Stocks are up hundreds of points this morning. Who knows? It's probably going to rally into the close. And people are asking the wrong questions. So we are going to bring in my man Mish here, and let's take a look at what's going on across the indexes. Mish, how we doing today, brother?
I'm doing really good today, sir. How are you?
I am doing great. And, Mish, I woke up this morning, and the kids were giving us a little bit of a hard time this morning. By the way, hi, Mom. Hi, Dad. I love you guys. And, Gigi was just kind of stressing out a little bit. I could tell she was having a hard time. And Gigi asked, do you want to go out to breakfast? And normally I would say no. I I got to get in front of the computer. I got to start looking at what's going on in markets and everything. But I could tell Gigi was having a hard time this morning. So I was like, yeah, let's go out to breakfast. We went out. We had a really nice breakfast. And I knew as soon as I said yes that something was going to happen, that there was something was going on. And I swear the text messages from you started rolling in like right as we sat down to breakfast. And I'm not complaining at all. I'm telling you, every channel should have a Mish, folks, because this guy is just like Johnny Five, craving input and always consuming the data and looking through the numbers and the charts and everything. And the text messages start rolling in. Do you mind if I read some of these off to you?
Yeah, go ahead.
And I'm telling you, like, it was exactly as soon as I said yes, I knew I shouldn't have gone out to breakfast today. Rumblings about UK market resting for round 2. It's not over. Reverse repo to the rescue. Liquidity issue. BOJ is playing. 1 minute candle on USD JPY. Big long end bond sell off. Short term flat. And there goes the BOE. And then pivot alert. When I saw pivot alert come through in a text message, I was like, oh my God, it's all happening. And I'm sitting there with the wife trying to have a nice breakfast. Trying to be like, oh my God, I got to get to my computer. I need to get. So all that was happening while I was eating breakfast this morning. And then I got the big one. The Fed just flinched when BOJ and BOE defended. So, Mish, you were so on point this morning. So on point. So job well done, folks. You do not realize how much Mish adds to this channel. He really is just, he is a machine. He is a number crunching machine. So thank you for everything you do for the channel,
you
brother.
don't tell about the other half, the crazy theories I come up with that you go, no.
They're not all crazy. Some of them I poo-poo. I do my fair share of poo-pooing. But some of them I'm like, holy shit, he's onto something. And I'll never get over how quick you figured out my tweak to Manarino's indicator. I'll never forget just how much you deflated my ego with that text message. when I came up with the MMMRI based off of Cheeseburger's comments, when I changed it, and I was like, hey, Mish, I'm working on this video. It's going to take probably a day or two. So that, the channel might be quiet for a few days. I said, I think I made a little revision to Manarino's indicator, and I think it works pretty well now. And he comes back in 3 minutes, and he says, what did you do, multiply by debt to GDP? And it's exactly what I did. And the difference is Mish figured it out in 3 minutes. I sat there and plugged and chugged numbers for a couple of hours, and Mish got to the same place in 3 minutes. So this guy does a lot for the channel, I'm telling you, folks. Anyways, let's take a look at markets. Let's see what is going on because, man, it is just one of those big green days. Right now, the S&P up 86 points or 2.34%. And, man, you can see it started this morning when that story broke, coming out about the Fed and that they were considering a 50 basis point hike, and up markets went. We sold off just a little bit, and then we're just heading right back up. Dow is up 740 points or 2.44%. Are we going to hit 1,000? There's still 40 minutes, 37 minutes left in the trading day. We could.
Well, it is options day, so this could go either way.
It is options day. You know what? I had a lot of people in my video that I put out this morning, a couple hours ago. A lot of people pointed that out. Very good. And I didn't catch that right away when I was making the video. I got sharp viewers here, man. You guys are good. A lot of people pointed out that isn't this conveniently timed with options day? A lot of people had puts that were in the money, and well, those puts are going to expire worthless now, aren't they? That's interesting. Very interesting. A very well-timed bear market rally on options expiration day. And, that to Mish's point, we're going to have a lot of selling in that last half hour of trading. On options day, it's always volatile. So, hey, we'll see what happens. Up 740. Are we going to flirt with 1,000? Let's see. And then the NASDAQ is up 236, sitting at 10,851, up 2.25%. So just all the indexes are just ripping higher today. Weaker dollar, slightly more dovish Fed, all just rocket fuel for stocks today. Let's see what commodities are doing, and not across the board green, but a whole heck of a lot of green today. And again, a weaker dollar, the DXY heading lower. You would expect that. We've got gold is up $25 or 1.53%, sitting at 1661. Silver is at 1926. Heck of a day for silver, up 57 cents or 3%. Even copper's up 2% today. Platinum and palladium are mixed. Crude oil is just clinging to gains, up about 56 cents right now on WTI crude. Brent is at 93.45, up a dollar. Slightly better day for Brent. Natural
Natty
gas is
gas,
down.
man. Yeah, natty gas keeps doing that. Kind of peter down.
Yep, currently at 498. We'll talk a little bit about natural gas in Europe because I think there is people are being lulled into a false sense of security in Europe right now. The spot market. Well, let's look at that right now. Let's bring up ICE Dutch TTF futures here, and this is the chart of this is the spot market, the benchmark price of natural gas in the UK. Let me make that bigger here. All right, so this one, obviously, we have sold way off since that big spike that we saw in August, right? We spiked as high as 338. Now the spot market is down to 115. So certainly well off our highs and coming down seemingly with a lot of momentum. But I would just add that right now, and somebody mentioned this on Twitter. For the life of me, I can't remember who it was, or I'd give you credit. Let me know down in the comments if you know who this was. But somebody correctly pointed out that we're at a weird time in the natural gas markets in Europe because the storage tanks are full, but the demand isn't quite there yet. It's not quite the winter heating season. So there's really nowhere to send any more gas. So even if the Europeans try to buy more gas right now, there's nowhere to store it. And so the spot price is dropping. And that's causing the futures price to drop also. That does not mean Europe suddenly has enough gas to get through winter, because eventually it's going to get cold and they're going to start draining the gas out of the storage faster than they can refill it. And that's when the price is going to run again. So there is another big spike coming in these European gas prices. It's just right now, because of the seasonality in the storage tanks being full and no additional capacity, that there's nowhere to send the gas, even if they do buy it. So that's something worth pointing out. And I suspect that may be having a little bit of a knock-on effect with U.S. gas also, because U.S. LNG is starting to pile up. There's stories about tankers just sitting there waiting to unload in Europe, and they don't have the regasification capacity. So it's possible we've got just a little bit of a temporary issue going on in gas markets. I don't think it's going to stay that way. And the rest of the commodity space is a mixed bag. You've got some red and some green in your base metals. Same thing going on in your grains. 848 for wheat, U.S. corn at 683, and soybeans at 1393. So no real big moves there. Real quick, I got a couple of you fellers with your super chats. I have to say thank you to. Thank you for RN, stands for redneck. I love the names on these people. Thank you, sir. He just sends a very nice super. No message, no nothing. Well, I very much appreciate the support of the channel, Mr. Neck. Thank you very much. And I dabble in the redneck arts myself, if I do say so. So thank you very much, sir, and welcome to the channel. And I've got my man Mike Bender from Robin RC Models. What's going on, Mike? He says, noticed how Belarus is denying to prepare for war, but moved their entire army right to the northern border of Ukraine. Transitory. Yeah, I have been seeing that. I haven't been covering too much because it's wading into controversial topics. I don't want to bring out the Putinian trolls. I don't want to bring out the, whatever you call the opposite side of the Putinian trolls. They're both just ubiquitous right now on the internet. And you guys want to argue with each other, have at it. Just, hey, if you want to do it here on my channel, I guess I'll take the engagement. The algorithm probably likes it.
Well, I think as soon as that other four-letter country from the Middle East was proven to have boots on the ground, it opened up a way for Belarus to join.
Yep. Are we talking about Iran?
Mm-hmm.
Is there a reason why we said that other four-letter? We didn't want to go there either. Is the algorithm punishing Iran?
We're already talking about Belarus and Ukraine. I guess we could just throw in Iran while we're at it.
Yeah. Well, Belarus is a CSTO country, right? That is the Russian equivalent of NATO. So an attack against one is viewed as an attack against all. Belarus is probably Russia's biggest ally outside of China. Although China, I don't think they're officially a Russian ally. Belarus is. The Belarusian president, Lukashenko, has always kind of walked a fine line. When he initially came into power, he was very much not anti-Putin, but he was very clear to distinguish himself from Putin, saying, I'm not just a puppet of Vladimir Putin. Belarus is its own sovereign nation, and we make our own decisions. Well, ever since this Ukrainian crisis has developed, Lukashenko has really walked back from that, and he has very much embraced the Russian side of things. And the rumor is that the Russians are positioning troops reinforced by the Belarusian army, and that they're going to attack Ukraine from the north, make another run at the city of Kyiv. And, well, look, our leaders aren't done making this world worse. Suffice it to say, I guess I'll leave it there. This conflict is not over yet. Something tells me it's going to get worse before it gets better. Call me cynical, call me a permabear. But thank you very much, Mike. I appreciate the super chat, sir, as always, in the support of the channel and everything you do. All right, so let's take a look real quick at the bond market right now. The U.S. 10-year is at 4.2 right now. It was significantly higher than that today, currently down 2 basis points. Really, the whole curve is down with the exception of the 20 and the 30. So we've had a little bit going on there. The UK bond market is moving higher right now. The UK 10-year is at 4.09. Remember, 4.5 in the UK 10-year, that was where something broke in their pension system. At 4.5% on the UK's 10-year gilt, that was when the pensions were hours away from failure. And I draw attention to that because it really looks like we're at risk of something similar here in the States. Now, we went as high as 4.3 today, and the Fed got spooked, and we used those same liability-driven investment strategies in our pension funds here in the U.S., where they use these rate swaps to try to gain leverage to make up for the funding shortfalls over the years. Well, right now, that's causing pension funds to bleed out. And while this was going on in the UK, one would think that American pension funds were taking action proactively to make sure that didn't happen over here, right? Maybe, hey, look at this big problem going on with pensions, and we do exactly the same thing here. Should we wait around and wait for everything to catch on fire, or maybe we should unload this stuff now? I just throw them out there, just a thought. Let's hope U.S. pension funds did that. But I don't think they all did that, and I'm sure there is a number somewhere out there. I can't tell you what it is, but there is a number on these interest rates where that same thing could happen in our pension system, and I'm not sure these positions are so easily unwound. Real quick, looking at the U.S. dollar, it's currently at 111.78, down over 1.1 right now. Now, we were flirting with 114 this morning, and that's when the Bank of Japan, I mean, look at what happened to the dollar index. This is what the BOJ, selling those treasuries and then selling the bonds, selling the dollars to buy yen. Look at what it did to the DXY index. I mean, just a massive move in the dollar. So that's just going to be rocket fuel for stocks when that happens. And here is the article in question, the one I wanted to talk about here. This is dated late last night. No, I'm sorry. This is dated early this morning, a couple minutes after midnight. The dollar dives versus the yen. BOJ intervention suspected ahead of the weekend. The dollar tumbled against the yen on Friday, logging its biggest daily drop against the Japanese currency in nearly 3 years, as traders and strategists said Japanese authorities may be in the market to stem a slide in their battered currency. We have since had confirmation that, yes, they are in the market to do that. The yen rose as high as 144.8 per dollar in the late morning. Paired gains later on, up about 2.2% at 147.05. Right now, the yen is at 147.28. So, here is the USD JPY. Now, again, when you see this number going up, that's the Japanese yen getting less valuable. When you see this number going down, that's the Japanese yen getting more valuable. So right here, these big red candles down, that was the BOJ's intervention. They dumped a lot of dollars and bought a lot of yen, and that sent us from as high, we were over 150, almost 152. Did we break 152? It's hard to tell on this chart. We were right there, about to hit 152, and they took it all the way down as low as 146. So a big move down here. I think its intervention, said Carl Shimada, chief strategist at Corpay in Toronto. We're seeing lots of dollar selling and the yen moving almost vertically as shorts get squeezed. The Japanese government and the Bank of Japan conducted yen buying, dollar selling intervention in the foreign exchange market, the Nikkei newspaper said on Saturday, citing a source. Japan's finance ministry declined to comment. So the Japanese central bank is engaged in this obscene practice of yield curve control, where they will not let the yield on their 10-year bond go above 1/4%. Now, think about how low that is, right? We were just talking about the UK 10-year gilt at 4.5. We're talking about the US at 4.3. Japan is suppressing theirs at 0.25. And anytime the yield goes higher than that, they print yen and buy the bonds to drive the price higher and drive that yield down. Now, I did a video a few weeks ago about how there's just nobody left in the 10-year bond market in Japan. Like literally nobody is buying them. There was 4 days in a row last week where not a single person bought one of these bonds. So this naturally, when you print this much money to buy so many of your bonds, it drives down the value of your currency, right? Something central banks somehow were not aware of in 2020, that when you print money, you devalue your currency. So that's caused the yen to drop so precipitously. Well, Japan just happens to be the single largest holder of U.S. Treasury debt in the world outside of the Federal Reserve. And so they're selling down their stockpile of U.S. debt in order to raise dollars. Then they dump those dollars on the open market to buy yen with them. That drives the value of their yen back higher. Now, in the process, that also drives the yield on our 10-year bond even higher. And that's why the yields were so high this morning, because of this intervention by the Bank of Japan. This intervention caused the Fed to come out and say, we're going to hike less aggressively in the future. So one intervention begets another. It's amazing. The more you mess with things, the more you mess with the free market, the more problems
once
you
you
cause.
touch something, you have to do it again. So when you spend money to buy currency, you have to spend more the next time. And the Bank of Japan, if you kind of look at it, was messing with it yesterday. We saw right around 150.26, but they couldn't get it to go down. And today they just hammered it. The amount of money that used is ridiculous.
Yeah, we don't know yet how much they dumped, but looking at this move, right? And here's the US 10-year chart. Looking at what the 10-year yield was doing last night. The 10-year yield, here, let me bring this up to a one-day chart, and we'll leave it at 1 week. All right, it rallied from about 4.14 up to as high as 4.3. So they sold a lot of bonds. I mean, it takes a lot of money to move the U.S. 10-year Treasury 15 basis points in a couple of hours. All right, this was the Bank of Japan dumping those Treasuries. And I got a couple of folks here in the Super Chats I got to say thank you to. Thank you guys very much for your support of the channel. And who's first here? There you are, Mr. AK. How you doing, AK? He says, short, still a bear. Nothing has changed for the better. I agree. I'm still short. I didn't do any trades today. I'll mention that. I was considering adding to my shorts today, but I didn't do that. This bear market rally, whatever you want to call this today, it may go on for a little while. Markets can stay irrational longer than you can stay solvent. Now, I have some QQQ puts in play. I still have those out there. Those are good until January. This rally, whatever this is, will certainly not last until January. That's just my opinion. So I'm not trading around that position. If I see this rally gain too much steam, AK, I'll add to that short position, although I didn't do that just yet. When you see things like what they're talking about in the bond market, and we'll get to that a little bit, this Bank of America warning. I mean, this is serious language here. And I tell you, these dip buyers, a lot of people are buying in. I even saw it in some of the comments on that video I did earlier today. People saying, oh, I see this kind of negativity and I go buy. Congratulations for being a contrarian. Here, you want a cookie? Right? Like there's no like most contrarian award. It seems like in FinTwit, everybody's just like, well, all the contrarians are bearish now, so I'm just going to be bullish. Right? That's the FinTwit equivalent of dyeing your hair pink just to stand out in the crowd. Right? It's congratulations. Right? I mean, if you're going to be a contrarian, be right. And I don't think these guys are right. I don't think this market is going significantly higher. It might in the ultra short term, but we have not seen the bottom. No way. No way have we seen the bottom yet. There's just inflation's still high. The Fed is still talking about hiking, right? I mean, they're saying 75 basis points in November and then maybe 50 in December. Well, that's still 125 basis points higher than we are right now. And we're already starting to see cracks forming in the bond market. How much worse can it get? Don't ask that question.
I don't think they're actually cracks. I consider them chasms.
Chasms. Crevasses, even. A crevasse. A crevasse is formed in the bond market. That's my fake European accent. I apologize to my European
It's horrible.
compatriots.
I was going to say, please apologize to Europeans.
It's bollocks is what it is. Is bollocks get you flagged? Is that considered profanity? I hear it said all the time.
What do English people think about bollocks? Is that like damn? think that kind of mixes.
It's horse puggy. That's what that is. Thank you, AK, very much for the support of the channel, sir, and the super chat. Appreciate it as always. And free like summer. Hello, sir. Do you guys feel that everything is beyond a joke? I can still laugh about it, free. I can still laugh. So is it beyond a joke if I still get a job? I don't know. It's a kind of a cynical laugh, like, where I remember we were when I was a scalper, we got caught by the leftovers, the remnants of Hurricane Charlie. Captain was a little aggressive. We stayed out too long, and we kind of rode the edge of the hurricane into port, right? We weren't like in the eye of the storm. We were right on the edge of it, but it sucked coming in. And nobody wants to be in the cabin when that's happening, all right? The best place to be in rough weather, believe it or not, is out on deck, because when you can see the horizon, the seasickness isn't so bad. When you're below decks, you don't see the horizon, and so you get the conflicting messages between your eyes and ears, and it makes you nauseous. So everybody's out on deck, and we're just going over these monstrous waves that were just awful. I remember I had a crying message from my mom when I got back from that trip. That's one of the moments when I realized it was time to get out of commercial fishing. I had an engineering degree in my back pocket I wasn't using. But we were all out on deck, and the bigger the wave that hit the boat, the louder we laughed, and the more laughing we did. And it was this like cynical, oh my God, we're all going to die kind of laugh. That's what it feels like. That's what this market feels like as we're going over to it. It's like, oh,
yeah. I would have been the asshole eating the bologna sandwich.
You would have been the what? The bollocks?
Yeah, I would have been the bollocks eating the bologna sandwich while everyone's complaining about puking and dying.
Oh, not me, man. I got seasick every time I went out. Every time, even in fair weather, I got seasick at least once on every trip. I just learned to live with it. It's miserable, but as long as you keep working, nobody cares. And I learned to time it so it washed right overboard. Nobody ever saw it. Yeah. You let it rip when you're at the low point on the boat, and so it washes right overboard. If you let it rip when you're up high, then it washes across the deck, and everybody sees it, and then you got to hear it from everybody making fun of you for getting seasick. So the little talents you develop when you're a commercial fisherman is great. I got a weird background, folks. I'm sorry about all these side notes here. Yeah, I went from engineering student to commercial fisherman to engineer, back to commercial fisherman, and then to nuclear engineer, and now to YouTuber. Sure, typical career path. Why not? Thank you very much, Free Like Summer. Appreciate the super chat, sir, and the support of the channel. And my man Zarkos with the champagne bath is back. What's going on, Zarkos? Thank you very much, sir, for your generosity. He says, Nick the Pig didn't make my day today. You're talking about Nick Timoreos? Is that how you say his last name? He is the Fed whisperer over at the Wall Street Journal. He's the one who wrote that article today.
Yeah, I call him Tourmaline. I don't know what his actual name is.
Yes, but that is Nick the Pig, as Mr. Manarino would call him. Says, we'll see what happens next week. I'm still bear, as am I. Says, simply after studying the fundamentals, I'm sorry for people too heavily leveraged. It must be a nightmare. Zarkos, thank you for touching on that point. That is an awesome, awesome point, and it gets lost. I do believe still that this market is going lower, and that, as I mentioned, I still have puts in play on the QQQ. I still have a short bet on the NASDAQ, all right? But I'm not on leverage. I didn't borrow money to do it, all right? So nobody is going to margin call me and say, you need to sell your position or post more money to your collateral. If you're one of these guys who's borrowing money, going out on margin to make some of these big short bets, and if you're buying your short bets too close to expiration because they're cheaper, then something like this, Nick the Pig can come along with this rumor of a Fed pivot, and it can wipe you out. And you know what? In the long run, you were right. The market still goes lower. Doesn't matter. They cleaned you out. So you've got to be careful with that leverage. You've got to watch your expiration dates. These bear market rallies, like the one that happened over the summer, that was like a 3-month rally, and there was no reason for it. There was no justification for it whatsoever. The SPR dumping gagged me. Everybody knew that was fake, that all that lower gasoline price was fake. Everybody knew that. But the market still went higher. Like, you have to be careful. These things could happen. They can still clean you out. They can hunt your stop losses. They can margin call you. So great point, Zarkos. Yeah, it stinks if you're short and you see a day like today. It stinks to watch your balance go down. But as long as you did it right, if you're careful, then you'll recover from it. So I hope things work out all right for you. I hope Nick the Pig didn't clean you out too much, Zarkos. And thank you again very much, sir, for the support of the channel. And I've got R stands for I'll say it again. We'll find out if Bollocks and Redneck will get your channel flagged because RN stands for Redneck. Thank you again, sir, for the super chat. Just a nice message. No, I don't know. Is there supposed to be a sticker or something in here? No, no. I'm looking on the iPad right next to me on the other screen. Thank you, sir, very much. I appreciate the support of the channel, sir, and the super chat. And Cheeseburger, what's going on, Cheese? He's back. He says, I'm long wet wipes for when the S hits the F. Cheeseburger just loves to push those buttons, doesn't he? Cheeseburger has probably almost gotten me flagged like 5 or 10 times just for, oh, let's see if we can put this in a super chat and get Jack to say it on the air. No, not quite. But thank you very much, Cheeseburger. The inspiration for the MMMRI video, that was you way back when asking me that question. Long wet wipes, that's interesting. Yeah, I'm neutral. I don't have a long or short position wet wipes. But man, I had kids once. We used to buy those things by the caseload. We went through so many of those things.
So many wet wipes.
Have kids, they said. It'll be great, they said. I'm just kidding. I love my girls. My kids are awesome. They are awesome. All right. So let's see if we can get down. Here is the article that hit today. It's behind a paywall. I don't have Wall Street Journal, but this is the one that sent everything roaring higher today. This is the one that was by Nick the Pig. There's the name. Is it? How do you say it? Timiraos, I think, or Timiraos. This is the guy. They call him the Fed Whisperer. Yep. He said some officials are signaling greater unease with big rates to fight inflation. And the crux of the story was they're going to hike by 75. And then in December, they're going to get together and figure it out. Now, I mentioned this in my article this morning. We have had this exact message at least 2 other times now. This is the 3rd time I've heard this. Now, you may recall in some of the previous FOMC meetings and Jerome Powell's press conferences, which I live stream every time, that he has said we're going to hike by 75 basis points, but that we're going to look at the data and less aggressive hikes may be warranted in the future. Powell said this the last 2 FOMC meetings in a row. And each time he followed up with another 75 basis point rate hike. So this is now the 3rd time he said this. And everybody's like, pivot, pivot. What's that? Oh, you see that shadow over there? Pivot. Oh, there's a tussle in the bushes over there. I hear branches shaking. It's clearly a pivot. There's a pivot everywhere. Everything that happens, pivot, pivot, pivot. This market is obsessed with the pivot. There is a pivot hiding behind every bush, every blade of grass. Everywhere you look, I see pivots. Maybe it happens, maybe it doesn't. But this ridiculous optimism is just really getting old. And maybe this is the last time they say it. Maybe they really do hike by 50 points in December. But guess what? 50 points is still a hike. It's still raising those rates further. It's still bringing us closer to that number where something breaks. By the way, something breaks, that could have already happened, and we just don't know it yet. All right? Like the fire breaks out in the engine compartment a couple of minutes before the plane actually crashes. So for all we know, it's already broken, and it's just bubbling up to the surface. It just hasn't hit the tape yet. So this optimism that they might only hike by 50 points 2 months from now. This market is just so desperate for optimism, and maybe it's because the sentiment is so negative and the bears are just so loud, and hey, I'm one of them, right? I'm a perma bear. I wear that on my sleeve. I don't hide from it. I don't, I'll own that. But they're so desperate for any good news. I don't get it. And I don't think it's justified.
Hey, I put an extra question in the private chat for you before you move on to the next super chat, please.
Okay. Should I just read this one out loud? Just read this one out loud.
Yeah, it's from RN.
Yeah. He said, RN stands for Redneck, said, I thought I understood inflation until I realized that every dollar printed causes additional dollar shortages due to interest not being printed. Explain how we can have simultaneously, please, due to interest not being printed. Well, I can tell you this. Our economy, our fiat system, is dependent on debt expansion. We need more and more debt, all right? And the more debt we create, the more money we have to print to borrow, the more dependent on that flow of new money it gets, all right? So we printed all this money in 2020. We flooded the market with trillions of dollars, right? And we borrowed that money. So we created all these treasuries in order to borrow that money from the Fed that printed it. So now there's all these USTs are out there floating around, all right? And everybody went out and spent the money. They spent their stimmies. They're driving up the value of things. Well, now we're not creating that money anymore. Now the Fed is tightening. Now the Fed is no longer printing. All right, so you have this demand for dollars right now, as because the dollars have always been there. On top of that, we've got the inflation that we're living with. We've got shortages and deglobalization. So the rest of the world is desperate for dollars, not just us here in the States. A lot of this is driven overseas. Take the case of Sri Lanka, right? Sri Lanka had that collapse in their agricultural output because of their stupid FEW backwards initiative to make the whole country organic. Well, their tea that they grow was their cash crop. That's how they got most of their dollars, and they need dollars to buy fuel and to buy food. Well, now they have fewer dollars, and the price of that food and fuel has gone up. So now they need even more dollars. So there's a dollar shortage in Sri Lanka. Well, Sri Lanka needs to borrow dollars. So they go to the debt market to borrow the dollars. Well, that increases the demand for dollars, and so it increases the price of those dollars. What's the price of dollars? Interest rates. So it drives rates higher. So the more inflation they create, the more demand for dollars you need, the more dollars you need to pump into the system to satisfy the increasing demand for dollars. And it just goes around in a circle. And it's this fiat system is dependent on an ever expanding credit bubble. Problem is now it causes inflation. And we're at the point now where the credit bubble is nearing the point of popping, and we've got the inflation problem. And if we inflate the bubble a little bit more, which it's weird, but that's how you prevent the bubble from popping, is you inflate it further. But if we do that, we cause the currency value to collapse even more. So we are in this stuck in this do loop. And every time we do it, every time we inflate further to prevent the crisis, we make the problem worse down the line. All we're doing is delaying the inevitable at the expense of a much more catastrophic collapse later on. And it looks like that bird has finally come home to roost. I don't know if I explained that as well. I didn't really have a lot of time to rehearse that one, and my bubble metaphor might have been off a little bit, but all right.
Yeah, we got a couple super chats in there.
Yes.
One before Zarkos. Yep, that's the one.
And I got Cheeseburg says, did you ever look into Three Waters in New Zealand? Farmers protested down here Thursday, our time, drove farm machinery into main centers. That is the first I've heard of that one, Cheeseburger. I didn't know about a farmer protest. Mish, you're giggling. Did I just read something?
Nope, I was giggling at Cheeseburger. I'm sorry.
All right. So, no, I hadn't heard about that one. I do know that whoever that is, that skeleton-looking lady that's running things down in New Zealand, she frightens me. She really does frighten me. She is one of the most globalist, authoritarian. She puts on this kind, gentle, understanding, inclusive facade, but she is a hard cranking authoritarian. And I would not be surprised to see her following suit with what's going on in the Netherlands, with what Trudeau's doing in Canada, where hey, farming is the problem. Let's just put all our farmers out of business, and then wonder why there's no freaking food. I guess they don't care. They'll still be able to afford food. It's the poor people that'll starve. Silly rabbit. It's poor people that starve. So why do we care? That's what they're saying. So I'm not surprised to see that this has spread to New Zealand, because anything I've seen about the prime minister down there has really just made me sick to my stomach, to be honest with you. I hope this attacking farmers because climate thing is not going to be too long lived, because someone's got to realize, hey, that's how we eat. Anyone? Somebody? And all these people that are talking about, oh, we need to eat bugs. I'm seeing more and more of this bug eating thing. What the heck, man? This bug thing. They're all putting it on the menus now, and schools are offering. I was talking about this earlier today. I have these wonderful little bioreactors. They're brilliant little machines, and they were only $5, right? And they take bugs and they turn it into people food. They're called chickens. So why do we have to eat bugs when we have chickens that already turn bugs into people food? And I'm sorry for these overly simple words, but people should eat people food. Bugs aren't people food. All right. If I was starving, if I was in a plane crash in the middle of the Alaskan wilderness and I was starving to death, okay, I'll eat bugs if dying is the alternative, but it's not the alternative right now. I'm not in the Alaskan wild dying in a plane crash. So I don't want to eat bugs.
I don't have to eat my grub.
Yeah, no, don't eat the grub. The chicken will eat the grub and give me an egg instead. Or 10 grubs, 20 grubs, whatever. I see a grub now, I'm like, ooh, chickens will eat that. That'll be eggs next week. That'll be eggs tomorrow. So,
which are much better texturally than
yes, yeah. Avoid the green ones. Let's just put it that way. Avoid the green ones. So no cheeseburger. I hadn't heard of that farm protest, but I'll keep an eye out for that one. And don't be surprised to see them popping up in more different places in the world.
They also
Zarkos is here.
Why would you eat bugs if there's beans and rice?
Oh, beans and rice are so good. You're making me hungry.
Yeah.
GG, can we have beans and rice for dinner tonight? Sorry.
But only red beans and rice.
Oh, I don't discriminate. I like all the beans. I like a rainbow of beans. I like the pink beans, black beans. I like lentils. I like split peas. I like it all, man. I'm a simple guy. In case you haven't figured out, like I am a very simple guy when it comes to my diet. I can eat almost anything, but I'm drawing the line pretty hard and fast at bugs. All right, we're not going to eat bugs. How many billions are the U.S. again giving to Ukraine just today? I don't know. I don't keep track, but every day there's another one. That's, of course, inflationary. It is. Every dollar we spend is inflationary because every dollar we spend is borrowed at this point. Every additional dollar we spent. Yes, it is inflationary.
Out on this that we're not actually giving them money most of the time. We're
giving them stuff
from pre-positioned stocks.
Yes,
in Europe.
We're taking javelins and HIMARS that we have already paid for, that we've already built, we've already stockpiled, and we're giving that to the Ukrainians. And then, well, we have to buy more to replace what we just gave them. So that's what you see with Congress approving it and all that stuff. But I get your point. Like, war is inflationary, it's destructive, and there's better ways to respond to a financial crisis. It's so obvious what they're doing. It's so obvious they're just marching us off to war because they failed so blatantly as leaders. And I'm not pinning this on just Brandon. All right, I'm not going to pin this all on Brandon. All right, Orange Man did it, Obama did it, Bush did it. They all did it. Everybody since Nixon. And the only one who can really claim a little bit of innocence here, laughably, is Bill Clinton, because he's the only one that ever ran at a surplus for a very short time, but he did run at a surplus. Everybody who spent money that didn't exist from that they pulled into the present from the future at the expense of kids and grandkids, they're responsible. And that was all of us around the world, and not just here in the States. Europe did it, Asia did it, everybody did it. We have robbed the future for instant gratification. And every time it got a little bit painful, we robbed the future some more to avoid a little temporary discomfort. And that is what we're doing now. And it's probably going to be our response this time around again. I just don't think it'll work this time. But thank you, Zarkos. I appreciate the support of the channel, sir, very much. And we got somebody in the chat, by the way, that needs to be banned just because of their name. Just keep an eye out for that one. Somewhere between these. And Cormac Kilroy, thank you, sir, very much for the support of the channel. He says, hey, Jack, tried to give you an explanation on the British B word you were using. Algo won't allow it. Just a heads up, brother. Well, Cormac, if you want to go to the About Me on my channel page, my email is there. You have to click the I'm not a robot thing, but you can send me an email. I answer almost all the emails I get. I don't get to every one of them. I just get so many messages every day. And I could spend every day not making any videos, no live streams, just answering messages, and I still wouldn't get to all of them. I put in very long days, folks, trust me. But send me an email. Explain to me the British B word. I'd love to hear it. And thank you, Cormac. I appreciate the support of the channel, sir, very much. And there's my man, Mike is back. Thank you, Mike. He says, do you think Jay Powell will get a Nobel Prize one day? If he pivots, yes. If Jay Powell pivots, they'll give him the Nobel Prize, Mike. If he doesn't pivot, they won't. They never gave the Nobel Prize to Volcker, did he? Did they? He defeated the inflation of the 70s at great expense, right? It was very painful. Anybody who was in the real estate market in the early 80s could probably tell you nightmare stories about 20% mortgages and what was going on there. Oh my God, I'm imagining what the interest payment would be on my house if my mortgage was 20%. Good God. Um, so Volcker never got the Nobel Prize, but Bernanke did. By the way, my Keynesian evil twin was very proud on the day that Volcker brought home his Nobel Prize. It was as if Kay had earned that prize himself. He felt so validated by Bernanke's Nobel Prize. Can you believe they gave that guy a Nobel Prize? Give me a break. Give me a break. They're so transparent in how awful they are. They being the elitists, the globalists, the Keynesians. Keynesian economics is just, it's going to go down in history as such a joke, such a failure. Until somebody, a couple of years will go by and then somebody will think of it again and say, oh, here's what we did wrong. Crushing Bear says VIX is green when market is so high. This is not right. That's a good point. Keep in mind the VIX is calculated based on options premiums. So the VIX does tend to rocket when markets go down, but that doesn't mean it can't go higher when markets go up. And also, that is an indicator that maybe this rally isn't for real, that maybe this is just options expiration. Maybe this is just, irrational exuberance based on when pivot. So let's take a look. I haven't looked at the VIX today. I am remiss. Let's bring up the VIX chart while we're here. Should have that thing linked, but I don't. The VIX is, okay, it's down a little bit, but it should be way down. The VIX is just barely red. There, now it's just barely green. Yeah, I'd expect the VIX to be way down today. That's interesting. We'll keep an eye on that one. Who sent me that? That was a good comment. That came from Crushing Bear. Thank you, Crushing Bear. Appreciate the super chat, sir. By the way, I got an email from you I still need to answer. Speaking of emails, me answering emails, I got to get to that one, Crushing Bear. Thank you very much, sir, for the support of the channel, and thank you for your support on Patreon as well. Crushing Bear is one of my Patreon supporters. Thank you guys for everything you do for the channel. There is a link down below in the description should you feel so inclined. And there is only one way, says rug pull for the USA in November. Biden speech. Is there a Biden speech going on right now or rug pull in November? That's interesting.
Well, we have in November, we have right within a week. Hold on. First off, Ice Age, and 2, Bollocks is cojones.
Okay.
But we have all within that week. We have the Fed coming out. We have
the Fed is November 2nd.
We have elections on the 8th. We have CPI right then.
OPEC on November 1st, I believe.
OPEC.
I wrote all these down. OPEC is on the 1st. The Fed is on the 2nd. The election is on the 8th.
And then CPI, I think, is on the 10th.
So it's not next week, but the week after. It's going to be an interesting couple of days. And geez, what do you think? Another OPEC production cut. What if OPEC comes out and says we're going to cut another 1 million barrels or another 2 million barrels? Because keep in mind, the cut from OPEC was about punishing the U.S. for trying to rig markets, right? And what was the U.S.'s response? We're going to rig markets even harder. So OPEC can cut a lot longer than we can dump SPR, can't they? They can cut a whole heck of a lot more. I mean, they could just force us to dump the whole SPR in a couple of months if they were to just come out and say, we're going to cut by 10 million barrels. It would hurt their economies, but it would crush us. So what do they call that? The October surprise? Maybe the November surprise? The last couple of days before the election, the FOMC, OPEC. It's going to be an interesting couple of days.
It really is.
Yeah. Thank you very much. No, there is only one way. Thank you very much for the super chat and the support of the channel. And we are all caught up. Outstanding. All right. Now, where was the other one I was getting to? Oh, check this one out. Okay, so this is, I apologize for the small font here. I can't zoom in on this one, but I can see it on my screen. This is a screen grab from a MarketWatch article, and MarketWatch is also behind a paywall. So somebody posted this on Twitter. This is freaky, all right? Bank of America came out with a note, and this is dated at 10 a.m. this morning, which is, if I had to guess, I'd say this is probably looking at the same thing that the Fed was looking at when they were talking to the Wall Street Journal about the possibility of a lesser rate hike in December. Fragile Treasury market is at risk of large-scale forced selling or a surprise that leads to breakdown, B of A says. And that headline, that should scare you. Fragile Treasury market. All right. The U.S. Treasury market is not supposed to be fragile. It's supposed to be the safest, most risk-free asset other than gold available. So when you see the U.S. Treasury market being described as fragile by a GSIB bank, take that seriously. And then when they say it's at risk of large-scale forced selling, holy crap. That's what happened in the UK on September 28th, there was large-scale forced selling in the UK bond market. The UK bond market isn't a fraction of the size of the US bond market. You're talking a $23.7 trillion market. The world's deepest and most liquid fixed income market is in big, big trouble. For months, traders, academics, and other analysts have fretted that the $23.7 trillion treasuries market might be the source of the next financial crisis. Then last week, U.S. Treasury Secretary Janet Yellen acknowledged concerns about a potential breakdown in the trading of government debt and expressed worry about a loss of adequate liquidity in the market. Now a strategist at B of A Securities has identified a list of reasons why U.S. government bonds are exposed to the risk of large-scale forced selling, i.e. margin calls, or an external surprise at a time when the bond market is in need of a reliable group of big buyers. We're unsure where this forced selling might come from, though they have some ideas. The analysts said they see risks that could arise from mutual fund outflows, the unwinding of positions held by hedge funds, and the deleveraging of risk parity strategies that were put in place to help investors diversify risk across assets. And it's that last part there, that's the red flag for me. When they say the deleveraging of risk parity strategies that were put in place to help investors diversify risk across assets, that's liability-driven investment. All right, that's what the pension funds, that's the strategy the pension funds use to try to mitigate interest rate risk with these big leveraged bets on interest rates going down. That's what almost blew up the UK pension system last month. And that's what they're talking about here. They're not saying it. They're being very careful with their wording, almost like to not accidentally start a panic. You know, it's like, well, folks, it's like the captain of a ship saying, well, folks, I just want to mention that there is a very slight chance that the vessel may submerge a little bit. I don't want anybody to freak out, but, you know, the boat might suddenly become a submarine. You know, that's what Bank of America is saying here.
No,
So,
I got one better for you. I'm in a
go
military,
ahead.
and we're flying from Sardinia down to Sicily. Supposed to be going to Greece, but we're going to go to Sicily because something's wrong with the plane. The captain comes on the internet or the intercom and says, "Hey, we're going to fly in a couple circles around the air traffic controller tower because we're not sure if our wheels are both up or both down or one and one. Don't worry about all the emergency gear you're going to see on the runway." That was the announcement.
That's just for show. See all those firefighters and paramedics and that hearse right next to it? Yeah, don't worry about that. That's just cosmetic. Everything's fine. So yeah, when I saw this note, and thanks to Adnan's Arc, who posted this on Twitter so I could read it because I don't want to pay for Market Watch. But yeah, that was large-scale forced selling in U.S. Treasuries. Take that seriously, folks. That's all I can tell you. Take it seriously. All right, guys, it's 4:09. Markets are closed. Let's see where we ended up for the day. The S&P ended up closing up 86 points or 2.36%, just barely off the highs of the day. The Dow ended up closing up 748, pretty much at the high of the day, up almost 2.5%, over 31,082 on the Dow. And the NASDAQ picked up 2.3% or 244 points to close at 10,859, also just barely below the highs of the day. So really,
now they are talking weekly gains that they haven't seen since June.
Yeah.
From this week.
Yeah. Well, let's see. What's a 1 week chart? I mean, you know, take away today, and it wasn't really that good of a week, was it?
Nope.
It really wasn't. I mean, all of the week's gains, at least in the NASDAQ, were this week. Let's see what the Dow did this week. Yeah. Again, take away today, and you get nothing. All the gains were just today. And again, let's look at a 1 week chart. All the gains were today. Otherwise, opened up pretty much or closed right where we were. So, long story short, folks, the Bank of Japan, they got involved in markets. They almost caused a panic, caused the Bank of America to come out and say, we're worried about margin calls in the U.S. bond market, caused the Fed to come out and say, maybe we won't be so aggressive in December. That sent stocks higher. Stock market investors are just desperate for optimism right now. And I'll tell you, folks, the bond market is way more important than the stock market. Stock market gets all the headlines. People pay more attention to stocks, but it begins and it ends in the bond market. And right now, the bond market is having big problems. All right. When you see things like forced selling in the U.S. Treasury market, the most liquid asset in the world, and they're talking about a short squeeze, not a short squeeze. I'm sorry. What would you call it? Margin calls, a supply squeeze. I don't even know what you would call that.
Yeah.
But
what did he
scary.
squeeze?
Yeah. Pucker up is what that means.
Yep.
And shout out to the Happy Hawaiian on Twitter. If you guys don't follow the Happy Hawaiian, you should. He's one of my favorite on FinTwit. And I've spoken to him. I've never met him. I've spoken to him a couple times on some interviews that we did with Wall Street Silver. But this was a pretty good one that he came up with today. He said, heard there was some pivot news and saw it was Mary Daly. Now, Happy Hawaiian is definitely one of the pivot crowd. He's been saying the pivot soon, which I tend to disagree with, but I respect this guy's opinion a whole heck of a lot. He said, during 2021, Mary Daly was the one saying the entire time that we need to hike and stop QE while others said no. Now she wants to slow down hikes. She is the canary in the coal mine. And then I got a kick out of this. Neil Kashkari, he's the caboose and always the most late to the party. Neil Kashkari's eyes just freak me out, by the way. That talk about a guy that should just wear, like, I don't know, blackout glasses or 2 eye patches. Neil Kashkari's eyes freak me out. I'm like terrified. It's one of my worst nightmares is accidental eye contact with Neil Kashkari one day. Lasers on those things. Anyways, this is what Mary Daly was saying. This was today. It's important that we slow our rate hikes. Excuse me for a second, folks. So that was the first thing. Now, Mary Daly is typically of the more dovish side. So this is a return to character for her. Not exactly out of character, but she's been very hawkish lately, and now she is waxing dovish. And then we got this one also from Mary Daly today. If you continue to tighten until the lagging variables of unemployment and inflation return to a steady state, you could easily over-tighten. Now, that's important, lagging indicators, right? When we talk about CPI or when we talk about the unemployment, we're talking about what inflation was last month. We're talking about what unemployment was last month or the month before that. Right? These are lagging indicators. You're looking back in time and you're trying to make decisions on what's going to happen next month. It's kind of like looking at your rear view mirror, wondering when should you step on the brakes. You probably want to be looking in front of you a little bit more. Now, when I look out front and I look at inflation, I still see higher inflation in the future. Right? I see core inflation continues to go up. Maybe home prices stopped going up, but there's still such a huge gap between owner's equivalent rent and what actual rent is that I know that shelter inflation is going to continue getting worse for a long time. And then the energy markets, forget it. Energy is going so much higher, so much higher. So when I look forward, I still see higher inflation out there. But the unemployment thing, I don't believe we should even look at unemployment as an indicator in what we should do with these rate hikes at this point right now. Everybody's working that wants to work, and I think that's a good thing. I think we should make more people want to work, not by inflicting pain on them to force them back into the job market. I prefer the carrot to the stick. Let wages rise and more people will come in.
Lure them back into the market.
Yes, lure them back into the market. Please come work. Please come be productive. We will pay you fairly if you do so. Oh, no. Sorry. We had asset inflation. That made us rich. That made the rich richer. That made the Fed governors rich. And then they sold their stocks to eliminate the appearance of a conflict of interest. And now we have consumer inflation. Oh, that's all right. It's transitory. We're going to let it run hot for a little while. No problem. Wages are rising. What? Okay, hold on. Slam on the brakes. Wait a minute. Put everybody out of work. Crash the economy. Now it's a problem. That's what the Fed is doing. You can't cause inflation in assets and then cause inflation in consumer prices and then be surprised when wages rise. And if you slam on the brakes before the wages rise, then all you've done is made people poor and made sure they stay that way. If you're going to mess with the system, do it fairly. Better yet, don't mess with it at all. I just throw them out there. Do what you want with them, folks. All right, I'm going to get on my soapbox before I get myself in trouble. Get off my soapbox. All right, guys. I think we got it all. Did I miss anybody? I don't think I did.
Nope, I think we're caught up.
No, we are caught up. All right. So, long story short today, the Bank of Japan got two interventionists, and they caused problems. And so they intervened even more, because that's what happens when you mess with it. When you mess with it, you have to mess with it more. And then when the Bank of Japan went and they messed with it even more, that caused U.S. Treasury yields to spike, and that caused the dollar to sink. And then the Fed says, uh-oh, we got a problem. We're worried about forced selling in the Treasury market. And Bank of America's over here like, I agree. So the Fed said, we better mess with it some more. So let's call the pig over at Wall Street Journal, and let's leak a story that we're going to wax dovish. And then stocks say, ooh, lower dollar, dovish Fed, onward and upward we go. And stocks rallied. That's how we got where we're at today. Now, if you can look at all that information, take that all thing in a whole, and be optimistic, good on you. All right? Sometimes I envy the optimist. You know, I'm that meme that goes around, the sad guy in the corner, the stick figure drawing with the dunce hat on. And like, I'm at the party, drinking in the corner by myself. They don't know the sovereign debt bubble's about to pop. That's me. I'm a real gas at parties, folks.
I was going to say,
But,
in real life,
yeah. You know, I just don't get it. I don't get the dip buyers. I really don't. They're going to get burned. They're going to get burned. Not a financial advisor. This is not financial advice. This is just financial entertainment, folks. You do your own research and your own DD. Arrive at a decision that's right for you based on your unique situation. Certainly don't do what nobody special tells you to do, which I don't tell you to do anything. We live in a litigious society. I have to CYMIA. I apologize for that part. Anyways, Mish, you got anything you want to add?
Well, I was just going to say litigious is a pretty nice word. But don't forget your local coin shops. Junk silver is always a good buy. Easy way to start off small and start building that silver.
Yes. And, you know, I think I'm going to do a video this weekend about silver supply, because I see some things developing in the silver markets. Not so much the demand side, but on the supply side that has me a little excited. Let's just put it that way. Interesting things coming in silver markets. All right. Thank you, Mish, for everything you did today. Thank you for being so on point. Thank you, everybody, for your super chats. Thank you to my Patreon supporters. You guys are awesome. Thank you, Mom and Dad. I love you guys. And until next time, live small and dream big.